Hey traders, this is Jeff from Zen Trader with a market update. Very strange day today, very strange week. It's been very back and forth. Generally, the trend has been rally up in the morning, give the gains back in the afternoon, or rally on Monday, give the gains back. I'm sorry. Well, the markets fell on Monday, but then Tuesday the markets were up. It's been a very flat week, very what I consider boring and choppy trading, and it's going to probably continue. There's lots of macro news coming up. Something going on in Europe on over the weekend. You've got the Fed coming up. You've got this is just a miserable month, I think, in terms of trading from a whipsaw non-trending point of view. We'll see. I haven't really done a whole lot with my positions. My timing signal has improved, but it's still bearish, and I get a sense that a lot of people think this market's going to bust the upside. They're viewing the action. I mean, if you just look at this intraday chart, I mean, it's kind of obvious to see this inverse head and shoulders forming on the Nasdaq. Same thing on the Dow. Today's action went right up to resistance, and it was rejected a little bit. Let me go back to the Nasdaq. I'm not going to get too excited. The Nasdaq is definitely underperforming the Dow. I wouldn't get too excited until we break above and close above this 2900 level on the Nasdaq. When you look at a daily chart, you can see that we're just consolidating right below this area of resistance and the 200-day moving average, just kind of hanging out. And this is kind of normal when a market sells off, finds support there. It's just going to kind of chug along here until it picks a direction. So not a whole lot to do. I wouldn't be trading too heavy in a market like this, because you can get caught on one side of the trade, and that's not very much fun. Here's the Dow. Like I said, I think a close above what's this, about 12,740. That would do a lot, I think, and that's not that far ahead. Above, that's like 100 points. Let me see here. The thing that really jumps out when I look at this daily chart, these are the Keltner channels, is that we haven't even closed above the middle Keltner channel only once, and then the next day was like a massive red candle, and we're still kind of trading. This technically is not an inside day because it actually was lower than this, but we've just kind of been trading inside this huge bearish candle, which is not exactly a bullish thing. So yeah, the ADX is kind of working off some of this, some of these high levels. It could still just head down here until about 15. Maybe it doesn't do a whole lot, and then that's the new trend is when it starts. So when you look at these, the main indexes in the Keltner channel, we've just closed above the middle one on the Dow, and the S&P just kind of peeked its head. So not exactly screaming bearish. Nasdaq advanced decline. This is not bullish at all. This is definitely in a bearish trend. It's staying below the 13-day moving average. The 13 and the 34 are both pointing down, although they are flattening out. Negative DI is convincingly in the lead. So, this is bearish. Another market that I want to talk about was bonds. Just from a pure momentum chart standpoint, this has been very bullish, bouncing off the 20-day moving average. It would not surprise me in the least to see this, maybe consolidate a little longer and then start to head back up and then retest. And then at that point, that would see the markets maybe retesting some lows, maybe finding some support. This could run into some trouble once it gets back up into this 130 level. But I would be surprised if this is the end of the run in bonds. I think this is just a pullback, and if bonds start to go back up, then the markets will most likely head back down, like I said, and kind of test some of those lows. So I'm cautiously bearish now. So there are some things that are